Welcome back to Yahoo Finance. I'm Jennifer Schoenberger. FTX's bankruptcy has rocked the crypto world and renewed calls for legislation to regulate the space. Senator Cynthia Lummis, along with Senator Kirsten Gillibrand, put forth legislation back in June to regulate crypto. Senator Lummis has said that market manipulation and protection of customer assets are just a few of the major issues that have been involved with FTX's bankruptcy, and she joins me now to talk about this. Senator Lummis, welcome back to the program. It's great to have you.
It's nice to be with you. Thank you.
Senator, we're just learning this morning that there could be more than 1 million creditors involved in this case. At the same time, a reported snapshot of FTX's balance sheet shows the day before it filed for bankruptcy, it held just $900 million in liquid assets versus $9 billion in liabilities. At the same time, there are reports that now former CEO Sam Bankman-Fried knew about customer assets that were being shuffled to shore up Alameda's position. Senator, to what extent do you think this was a Ponzi scheme?
Well, it has all of the visual indications of being like a Ponzi scheme. Certainly, when you're taking customer assets out of FTX, sending them over to shore up Alameda, that is commingling assets that belong to your customers and that you are custodying for them and taking them and using them for your own purposes, borrowing from Peter to pay Paul. And so there are incidents or indicia of some Ponzi scheme-like behavior. And so I'm sure we'll see the Department of Justice, the SEC, and other regulators looking into this.
You, along with Senator Gillibrand, put forth probably the most comprehensive piece of legislation to regulate crypto earlier this year. Would FTX's bankruptcy had happened if your legislation had been in place? How could your legislation have protected against this scenario?
Yeah, FTX's bankruptcy would not have happened if the Lummis-Gillibrand bill was in place, because we disallow the commingling of customer assets with non-customer assets. We would require that there be separation and segregation of customer assets from non-customer assets. We would require more consumer protections, more disclosure. The fact that there were over 130 companies involved with the FTX orbit, and the fact that they created their own cryptocurrency or stablecoin, FTT, and then put it over in Alameda, bought their own asset, FTT, thereby creating a market for their own asset that other people bought, and then they pulled the rug out from under them by taking their money out. It was clearly activity that is within the regulatory parameters of Lummis-Gillibrand that would have been illegal, and they would have been regulated by the SEC, requiring consumer protections and disclosures that do not now exist.
Senator, has this episode, the bankruptcy itself and the events leading up to it, caused you to rethink any portions of the bill? Do you think you need to go and tighten and toughen any areas of this?
We'll definitely be reviewing the bill under the lens of the FTX bankruptcy to see that we have adequately protected consumer assets during a bankruptcy, protected consumer assets from being commingled, and making sure that our definitions are sufficiently tight. So definitely we're going to continue to comb through the bill, but we do think that our bill, being the most comprehensive bill out there and the one that is very neutral when it comes to not favoring one cryptocurrency company over another, allows for responsible innovation. At the same time, it provides consumer protections and SEC disclosure of assets that fall under the category of a security.
And Senator, to be clear, your legislation does mandate capital requirements. It would deal with risk management controls, right? There was a lot of leverage that was undertaken in this case. It would include all of those, correct?
That's correct. It looks like that FTX was in the range of 101 to 1 in terms of their ratios that they were using to leverage. It clearly protecting consumer assets was not their highest priority. In fact, it may have been their lowest priority. So our bill would require those kinds of safeguards in that custodied assets, consumer assets, would have 100% backing.
Do you think that this case has increased the urgency for Congress to consider crypto legislation? What are you hearing from colleagues now? Could your bill now be reconsidered through committees almost immediately? Would it have to be broken up? What is your sense there?
Well, I do think that now that the bankruptcy has already happened, the better thing to do is evaluate legislation based on what has happened, make sure that we're comfortable that it has closed potential gaps that allowed FTX to behave in this manner, and that we probably go forward with the bill in 2023. So I don't think we need to, using some sort of a knee-jerk reaction, do it immediately during this lame duck session that just began this week. I think we have time to move in a very careful and deliberative manner in 2023. And at that time, break up the Lummis-Gillibrand bill, which is currently in one piece in the Senate Finance Committee. And then we can, but it's subject to being broken up. And so we can send some parts of it to the Ag Committee, some parts to the Banking Committee, other parts to the Intelligence Committee, and make sure that we're covering all of the bases associated with not only this bankruptcy, but the ability to protect consumers going forward, while at the same time allowing innovation to occur in this country.
Senator, since it will take some time to examine and go through this process, take a careful approach, as you say, should the SEC start increasing some of the regulations using the authorities it already has? For instance, should it now mandate that crypto exchanges register with the agency? Should traditional broker-dealer rules that would separate customer assets out and not have allowed those customer assets to be used, Alameda Research in this case, should the SEC pursue that right now in the absence of legislation, and given that it could take time for legislation to be put in place?
Yeah, I have no doubt that the SEC has already begun investigating these matters. It takes quite a while to build a case at the SEC for a complicated organization like FTX. I have no doubt that that's already begun. And it also looks like FTX was violating existing laws. The SEC, I'm sure, is making the efforts it can right now to address these issues, while we will be working with the SEC and the Commodity Futures Trading Commission to get this legislation not only prepared for prime time in January of 2023, but bring our colleagues into the discussion. And the FTX bankruptcy has certainly given rise to the priority and the importance of having responsible regulation of digital assets.
Senator Lummis will have to leave the conversation there, but we so appreciate your insight, and we will be following your legislation closely. We hope to talk with you again soon.
Looking forward to it. Thank you so much.
And that was Senator Cynthia Lummis of Wyoming.